Good morning, everyone, and I hope you all had a nice Veterans Day weekend. Here in Canada, it's Remembrance Day, and it was a long weekend. And anyway, today we're getting started with the markets. Thank you guys for tuning in. Welcome to the show. Today is the 13th of November, 2018. And we're going to get started right here by opening up the charts right here and get into the markets. Now, the first thing going on today is cryptocurrency we're going to talk about first. And, you know, it's been in the awful malaise for a while now. Let's see, what time is it? It's 10:26. So our stock market doesn't open for 4 more minutes. Anyway, talking about cryptocurrency. It's been in a malaise. It's almost like a ship that's out at sea and it's lost wind and it's just kind of floating around out in the sea back in the old days of sailing ships, you know. It's not really going anywhere right now. It's been moving actually ever so slightly down in price the last day or two. It was up around $6,500, but it's fell off to $62.77. Let's take a look at cryptocurrency market capitalizations while we're here. And, you know, we've been in this range for quite a while now, in around a market cap of $212 billion. This morning it's $212,384 million, and Bitcoin dominance of 52.2%. And what we're looking at is well, it's been going up and down a little bit, you know, but relatively it's been staying flat overall, the cryptocurrency markets and market capitalization. So let's take a look at silver price today, see what's going on there. We see quite a little bit of volatility in the price, you know, but it's staying low. It's staying in just above, it's just keeping its head above $14. In fact, it's dipped a couple times down below $14 in price, which is incredibly low considering all the danger, considering that this is a safe haven asset, considering how rare it is, considering the fundamentals. This is an extraordinary bargain because the silver price has come down for years now. Lower, 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 lower. While the price of nominal inflation on everything else in the economy has went up. Your meat prices have doubled in the same time that the silver prices has fell by like, and so what's happened is priced in silver, if you were to go back 5 years ago, meat was so much cheaper than it is now. Now, priced in silver, you'd only get about a quarter as much meat if you're comparing meat to silver. Anyway, let's take a look at the gold price this morning right here. We see it made a bottom down there. This went down below for quite a little while now this morning. It dipped down below $1,200. It's just barely holding its head above $1,200 right now. $1,201.50. Okay, so now let's just take a look at oil. Now, I'm going to tell you what. The price of oil, this is scary right here. This is scary. She is down 80 cents. It's down 1.33%. It's under $60. And why I say this is scary is this is very deflationary. This is oil and copper are the two commodities that are like canaries in the coal mine for the economy, is oil and copper. Those are the two things. Now, I think this has an awful lot to do with what OPEC's doing right now, the reason why this oil price is down so low. But now, let's turn our attention back to the stock market. It should be open. It says 10:30. Remember we had a big fall yesterday, or was it yesterday? Yeah. We had a big fall in the stock market, 602 points down in one day, 2.32%. We're going to refresh the page right now, and it's almost like opening up a present at Christmas time. I just want to see what this market's going to do today. Okay, so we're down 37 points on the day so far. 46 points. Boy, she's volatile. You see that? You see how quick that moved? 46 points down on the day so far. So the market right now is it's very volatile. There's a lot of pressures on it, and an awful lot of this has to do with the bond price. So let's take a look right now and see what bonds are doing. Bond yields are falling, and that's not a surprise to me because the stock market's falling. What's happening is bonds are the money's being transferred between bonds and the market right now. Investors feel like there's no place else to go except into the U.S. dollar and into the equities or into the bond market. And the problem is the Fed's taking advantage of this, and they're sucking $50 billion every month of liquidity out of the system this way. This is a method of draining liquidity. So we're seeing this transfer between the two markets while the Fed is slipping the money out every month. And this is where the action is. The action is between equities and bonds and between the Fed drawing that money out every month. That's where the action in the entire world's financial system is. But this drawing of liquidity it's going to have an effect at a certain point. It's going to have a breakaway effect that's going to happen really fast and suddenly. So we're seeing this U.S. 10-year. It's under the 3.25. It's at 3.16. And so it needs to be up over the 3.25. It needs to be up like 3.30 or 3.35 or something like that in order for I see it to have a very steep decline in the market, like a 1,000-point drop or 2,000-point drop in the market. It needs to be up over that point, and it's not. It's down at 3.165. So I see maybe a little bit more decline in the market, but we need to get that bond rate, that U.S. 10-year specifically, we need to get it up to like 3.5% or something before we're going to see the big fall, like the big crash. And right now it's at 3.16. So I mean, I could be wrong. We could get a big crash at 3.16, but I don't really see the big crash coming until we get that higher. That U.S. 10-year has to be higher so that more energy can come out of it. That's the thing. It needs to get higher. It's not high enough. So we're going to wait and see what happens with this stock market, but it might be I don't really see the big fall just quite yet with it. So we're going to have to wait and see what happens there. Listen, here we go. U.S. dollar index, 97.29. It's up above 97. This is worrying as well, just like the price of oil. I'm going to tell you, that 600-point drop in the stock market doesn't worry me as much as this U.S. dollar index over 97. This is very worrying, U.S. dollar index over 97. And the oil price dropping as low as it's dropping is very worrying. It's more worrying. Oh, Deutsche Bank, I checked them last night. They're not doing so well right now. They're not doing so well. They fell back down again, and we're going to have to keep a very close eye on Deutsche Bank, because I'll tell you one of the things about Deutsche Bank real quick before I end this show. Deutsche Bank's got so much nominal derivatives exposure that they could take down the entire system. So they would have to be saved. But I don't really see anybody out there to save them. You know? And Deutsche Bank is one of these things that the stock is only going to get so low to a certain point when all of a sudden there's a panic sell. And everybody starts to get rid of it. Everybody starts to wash their hands of it because they realize there's no money to be made in it. It's a failing institution, and it's going down. When that realization suddenly clues in, then you're going to see the Lehman moment with Deutsche Bank. Now, when's that going to occur? I'm not exactly sure. It's all up in the air right now at this point. You know, it could occur anytime in the next year or two. Like it could occur next week. You know. Or it might be further out, might be 6 months out, or it might be almost a year away before that happens, because they're clinging, and they're like a guy that's out on a river hanging on to a life raft, a life vest or something. How long are they going to cling before they slip under? That's the thing. Nobody knows. So anyway, listen. Thank you guys for listening to this market report. Stay tuned, and we'll have another one tomorrow for you. I think things are really going to get exciting here. Exciting in the way that the crash is going to really get underway very, very shortly within the next few months. So listen, thank you guys for listening. Like and subscribe. We'll catch you in the next show. Bye-bye.